Today we have a topic that has been making waves and sparking discussions across the real estate community, the housing crash of 2024. But before we dive in, be sure to hit that subscribe button and ring the notification bell so you never miss out on our latest updates. Now, let's get started. What are the key factors contributing to the speculation about a housing crash in 2024? Let's break it down. Firstly, we have overinflated home prices. Recent reports are sending warning signals, suggesting that the rapid rise in home values may not be sustainable. This, in turn, could lead to affordability challenges for many potential home buyers. So, are we standing on the edge of a housing bubble, and what are the implications? Stick around as we unravel the layers of this critical issue. The real estate market has seen unprecedented growth, but the question is it too much too fast? Are we witnessing a surge that's simply not in line with economic fundamentals? It's a precarious situation, and experts are closely watching to see if the market can weather this storm or if a correction is imminent. For potential buyers, the impact of overinflated home prices is palpable. Affordability becomes a major concern, locking many out of the dream of home ownership. The strain isn't just financial, it's also psychological. The pressure to afford skyrocketing home prices can lead to tough decision-making for buyers. Some may be forced to compromise on the type of home they desire or delay their plans altogether. Second is the impact of rising interest rates on the housing market. Before we delve into the housing market, let's first understand the role of the Federal Reserve. The Fed, as it's commonly known, plays a crucial part in shaping the economy. One of its tools is adjusting interest rates. But why does the Fed do this? And how does it impact the housing market? When the Federal Reserve decides to increase interest rates, it directly influences the cost of borrowing. Higher interest rates mean increased mortgage costs for home buyers. This can lead to a situation where some potential buyers find themselves priced out of the market. As the pool of eligible buyers shrinks, the demand for homes naturally experiences a slowdown. On the seller's side, the potential slowdown in demand can impact the speed at which homes are sold. Properties may stay on the market for longer durations as buyers become more cautious due to increased costs. This shift in market dynamics can also influence property values and create a more competitive environment among sellers. Furthermore, rising mortgage costs can have a cascading effect on the overall real estate ecosystem. New construction projects may witness a decline in demand as developers navigate the changing landscape. Real estate professionals, from agents to mortgage brokers, may need to adapt their strategies to align with the evolving market conditions. Now let's take a look with the supply and demand dynamics that are shaping the housing market. In any market, the relationship between supply and demand is a fundamental driver of prices. In the context of the housing market, this means the number of available homes and the number of potential buyers. When this equilibrium is disrupted, it sets the stage for significant market shifts. One key factor contributing to the potential housing crash in 2024 is the shortage of housing inventory in many regions. Limited availability of homes for sale creates a scenario where demand outpaces supply. This has been a persistent issue in recent times, influencing the dynamics of the real estate market. Let's examine the key factors, including inflation, geopolitical tensions, and the lingering effects of the COVID-19 pandemic on the potential housing market crash in 2024. Inflation, the rise in the general level of prices, can have a direct impact on the housing market. As the cost of goods and services increases, it often extends to construction materials, labor, and other elements of the real estate industry. This inflationary pressure can contribute to higher home prices, potentially affecting both buyers and sellers. Geopolitical tensions add another layer of uncertainty. International conflicts, trade disputes, or political instability can create a ripple effect on global economies. In the context of real estate, these tensions may influence investor confidence. interest rates, and market stability. The interconnectedness of the world makes geopolitical events crucial considerations in forecasting market trends. The COVID-19 pandemic, an unprecedented global event, has left a lasting imprint on various aspects of our lives. In the real estate realm, its effects linger on. From remote work trends impacting housing preferences to the supply chain disruptions affecting construction timelines, the pandemic continues to shape the housing market landscape. Now, as with any market speculation, there are contrasting views. Some experts maintain an optimistic outlook, citing a strong economy, job market improvements, and sustained housing demand. Others, however, are more cautious, pointing to the potential risks associated with the current market trajectory. It's a debate between the optimists and the skeptics. The optimists emphasize the market's resilience and improved regulations since the 2008 crisis, while the skeptics raise concerns about a possible bubble and the risks associated with a prolonged period of growth. But whether you lean towards optimism or skepticism, it's crucial to consider strategies to mitigate potential risks. Let's explore some actionable steps for homebuyers, sellers, and investors alike. Diversification of investments is key for real estate investors. Spread your investments across different property types and geographic locations to safeguard against localized market downturns. Thorough market research is essential for home buyers and sellers. Understand the dynamics of your specific region, including job markets, infrastructure development, and demographic trends. Knowledge is your best ally in making informed decisions. Financial preparedness is a priority. Buyers should ensure they can comfortably afford mortgage payments even in a rising interest rate environment. Sellers, on the other hand, should be realistic about pricing and avoid overestimating property values. As we wrap up, remember that the housing market is a complex ecosystem influenced by various factors. Stay informed, exercise caution, and be proactive in adopting strategies that suit your specific situation. If you found this video helpful, don't forget to give it a thumbs up, share it with your friends, and leave a comment with your thoughts. And of course, subscribe for more real estate insights.